Welcome to a new episode of Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Now let's make some money and hopefully get a lot smarter. Here with me now is a special guest, EMJ Capital founder and president Eric Jackson. Eric, good to see you. Yahoo Finance OG, welcome back into the fold after many, many years.
Great to see you, Brian.
Yeah, likewise. So, look, I've been following your tech work for eons. We may both look young. We've been doing this for a while. So let's start on the AI bubble. It's a term that gets tossed out there a lot, but is it a bubble? And how would you even quantify a tech bubble?
I don't think it is a bubble. I think it's basically one company dominating now with Nvidia. And I would argue, and we can get into this later, that they are actually not even valued in a bubblicious way at the moment, given their future expectations and where they might be going. So if you kind of set them aside, like point to me all the companies, these like so-called like dozens of .com, IPOs that we saw back in the day, like in 98, 99. Point me to the, 200x PE multiples where these public companies are trading at. Even in the private markets, I mean, I just don't see it. I don't see that evidence. So there's a lot of excitement for sure. I think the excitement is justified. I think there's a lot of investment that's going on right now, and we're getting to the point in the story where people are sort of saying, "Oh, well, we've been investing for 18 months now since ChatGPT came out, and so like, where's the evidence that this is really helping companies? Where's the revenue?" And with the exception of maybe like Meta, which has obviously juiced its revenue and earnings by the big investment that they've made in the Nvidia chips. We haven't seen it elsewhere, and so therefore people are saying, therefore it's a bubble. Therefore, Nvidia, there's been double, triple orders. This thing's about to crash and fall on its face. But I just don't agree. I just think there's a longer time horizon playing out here, and the markets are being much more rational in how they're pricing companies today relative to .com.
Imagine the semiconductor industry's version of a summer blockbuster, complete with high stakes, star-studded alliances, and whispers of groundbreaking technologies. This isn't a script for the next big movie. It's happening in real life. On September 4th, at SEMICON Taiwan, a reveal so monumental is expected that it could very well reshape the future of AI, GPUs, and next-gen memory. The spotlight will be on the chip-making giant, Nvidia, as it works on solidifying a triangular alliance with none other than SK Hynix and TSMC. So, investors should expect industry tremors and revelatory announcements that could set the tone for technological advancements in the years to come. Yet, what specifically will unfold at this cornerstone event remains unknown, leaving stock market analysts, investors, and tech enthusiasts on the edge of their seats. In today's video, we're going to talk about what investors should expect from the tech giants, as well as the impact of this alliance on Nvidia stock. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
You see it. You've been doing this for a while, Eric. You've seen it. You're actively looking through decks, financial presentations, earnings call transcripts, you name it. How do you, in this type of environment when everyone is so excited, how do you just spot bullshit? You're watching a deck, you see something, and you're like, I don't know how they're going to make money on AI. Because what I'm trying to do here is I would like to protect investors who are hearing a lot of hype out there and getting excited about this and thinking profits go up on a straight line for these tech companies. But I mean, you and I both know that's not the case.
No, and in my own firm, I run a tech-focused hedge fund, and we've been building AI models to help us with the stock selection and portfolio management process. And you sort of think like it's going to be relatively straightforward. You collect a lot of data, throw it into an AI algorithm, and great investment results are going to come out on the other side. And it's not that simple, and it is complex. It's not, you go down a lot of blind alleys and stuff like that. And I think the same is going to be true for a lot of other companies that are making these kinds of investments. So in terms of you're being mindful of protecting, investors, I think investors should just expect that, when you hear big promises like that, some company is about to like just flip the switch and see its revenues, double or triple, in a short period of time. I think that's probably unlikely. Nvidia has been a public company for I think 24 years, 25 years. So
yeah, they're not going anywhere. They're not going anywhere.
Well, yeah, and it was a 24-year overnight success, right? And so like now they're in the catbird seat selling their chips, but it took a lot of investment and stuff. So I just think that the revolution will come with AI, but just because somebody comes on and says, this company is the greatest thing since sliced bread, and they're gonna kill it in AI. I mean, I think you just need to be. You're right to kind of keep your bullshit detector on and just do some research and not just jump in with both feet.
SK Hynix, under the auspices of President Kim Joo-sun, will for the first time play a leading role at SEMICON Taiwan. They're capping this move with talks reportedly aimed at next-gen HBM collaboration and possible one-on-one talk with Nvidia's CEO, Jensen Huang. Nvidia, SK Hynix, and TSMC are reportedly planning to monopolize the AI and semiconductor marketplace, leveraging HBM4 memory technology as their secret weapon. It's like the Avengers, but with microchips instead of capes. Around 1,000 companies will attend SEMICON, and companies like TSMC attend to show off their latest semiconductor equipment and technologies, build new relationships, and strengthen old ones. Meanwhile, SK Hynix is an important and close partner of Nvidia and its continued AI GPU dominance, with SK Hynix also teaming with TSMC on development of HBM4, which will enter mass production in 2026, and Nvidia will use it on its next-gen Rubin R100 AI GPU. But what does this mean for Nvidia and Nvidia stock investors? Let's find out. Hello everyone, and welcome back to Investocracy.
Let's check in on a few of the top analyst calls from today. Nvidia shares higher on the back of two price target boosts. UBS raising its outlook from 120 to 150, citing demand momentum for the Blackwell chips, while Wolfe Research also raising its price target to 150, calling it one of the best ideas in semis. So UBS, for its part, talks, Julie, about demand momentum for Blackwell rack scale systems, says it's robust. Sentiment, yes, they say it's recently faded on the stock in the last few weeks, creating what they say is more a wall of worry that should be ultimately healthy if our outlook materializes. And then separately, as we know, Wolfe also raised their target to 150, talk about ASPs and improving mix driven by Blackwell.
Now, I'm sort of blown away. I don't know why I'm continually surprised by estimates for NVIDIA, but I still have the capacity to be surprised, apparently. So the consensus calendar 2025 earnings per share estimate for NVIDIA is $3.69, according to Bloomberg estimates. UBS says, no, it could be closer to $5 per share because of these channel checks that they're doing. Wolfe puts the number around $4, but $3.69 versus $5, that's a pretty big gap here. And the naysayers with NVIDIA have talked about this slowing growth trajectory all around. There's no way they could keep up this pace of growth. UBS says, well, given what we're seeing when we talk to people who are buying this stuff, there is still high demand. Now, we'll see if that does end up being the case. But it's still, it's just
it's
still
incredible.
Has its capacity to say, wow, $5 versus $3.69.
Well, isn't our friend Corey Johnson, if you tour him, didn't we ask him? And he said in his career, never seen anything like it.
No.
Never seen anything like NVIDIA.
We've thrown around the word unprecedented a lot after the past few years, but it still applies in some cases.
Nvidia's stock has performed so spectacularly that they're now what the Kardashians are to tabloid headlines. Always relevant, perpetually scrutinized. But if you think that Nvidia's current success is simply a flash in the pan, it's time to recalibrate your lens. The company's GPUs have revolutionized the AI landscape, becoming indispensable tools for developers globally, And this is extremely obvious when you take a look at the company's recent earnings. In fact, in Q1, the company's revenue shot up by 262% year over year, a noteworthy feat even in the volatile tech sector. Also, demand for AI services is unrelenting, and according to Nvidia's own projections, this trend shows no signs of abating. What's more, Nvidia's tentacles reach far beyond AI. The company commands an 88% market share in discrete desktop GPUs, a domain where it reigns supreme as gamers and tech enthusiasts alike conglomerate to get their hands on the latest in GPU technology. Their foray into automotive technology, too, is no mere sideshow. In fact, Nvidia's hardware is foundational to the self-driving ambitions of auto giants like Tesla, indicating the possibility of multi-billion-dollar verticals in the near future. CFO Colette Kress has even hinted that automotive could rival their data center segment, which itself accounts for a lion's share of Nvidia's revenue. Nvidia's chips are undeniably crown jewels, celebrated for their performance and capabilities. Yet, the real X factor propelling Nvidia forward might just be CUDA, their proprietary software platform. The platform allows developers to leverage Nvidia's GPUs for a staggering variety of applications, from AI training to scientific computing. It also makes Nvidia chips indispensable and impractically demanding for alternatives from AMD or Intel to infiltrate. So, this constant innovation in new and growing markets, as well as the fact that Nvidia puts out new products and technologies each year, is what will ultimately help the chipmaker maintain its market leadership. And this news of the new Triangular Alliance is no different, as it serves as a way for Nvidia to maintain its position in the market. With all of this in mind, is now the time to load up on Nvidia shares? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
We're also watching semis this morning, semiconductors. Analysts over at KeyBank, they boosted their price target on chipmaker Nvidia from $130 to $180 over robust demand for its AI chips. The firm also upped its price target on Micron from $160 to $165 here. It was really kind of a sweeping analysis of the broader chip segment here, but kind of coming back to what they were using as their methodology, talking about this cloud instance tracker and how they use this as essentially data analytics, tracking the proliferation of semiconductor architectures by region based on instances available to purchase in the public cloud. All that said, they looked across AMD, Nvidia, Google, Amazon, and others as well here, trying to get some clues with correlation to how much these companies are spending and when within their various architectures it will actually pay fruits for their business too.
Yeah, exactly. I think this all just comes down to demand, and they lay it out pretty just point blank in this report, saying that the AI demand continues unabated, that traditional server demand is actually improving. You mentioned some of those larger cap tech names there. The fact that the server supply chain feedback indicates that demand for traditional server demand continues to improve. Most of that demand is from those U.S. cloud providers that Brad was just mentioning, but they also go on to say that they are also seeing sustained demand from China, also moderating, improving demand here within enterprise. So all set up here for a bullish couple of quarters ahead of what potentially could be here for Nvidia. When you take a look at the stock, yes, we have seen maybe a bit of a reset maybe in Wall Street expectations or exactly what current valuations are after that 10-for-1 stock split. But again, the chart just says it all. Year to date, we're still looking at gains of nearly 160%. Yeah. And when you take a look at this momentum, it's pretty much consensus on the street that a lot of this is not going to slow down anytime soon.
Yeah, slight ding after. Right. And so the thesis largely remaining intact. A slight ding because of some of the insider selling that took place, but more largely the trend remains, and especially with what KeyBank is talking about here within the demand profile here, not seeing any signs of a demand pause as demand for H100 remains robust, they say.
AI-focused companies like Nvidia have been sprinting, if not leaping ahead. Nvidia has performed extremely well, as everyone from cloud companies to enterprises is fumbling over each other to get Nvidia chips. This is because in the race to build the most complex AI models, Nvidia might as well be the indispensable secret sauce. Given the convergence of positive factors surrounding Nvidia, like cutting-edge technology, strategic alliances, and sky-high demand, the stock looks set to stay on its upward trajectory. Invest now, and you might find yourself seated comfortably on a rocket bound for the stratosphere. Nvidia's recent history is punctuated with milestones, each more impressive than the last. Under the visionary leadership of Jensen Huang, the company has deftly navigated the complexities of the tech world. The stock's performance isn't just a testament to bullish market trends, it's a fundamental acknowledgement of Nvidia's dominance and expansive capabilities. Notably, Nvidia has continually outperformed projections, cementing its place as the go-to player in the AI and semiconductor sectors. The stock might appear expensive at 47 times forward earnings, but its unparalleled market position and broad capabilities justify the price. With earnings surging and attractive profit margins, Nvidia offers not just strong returns today, but a promising future. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.